So it's nice time we meet again for our sessions in e-learning. So my name is Edwin OCHOI. So for today, I'm going to talk about foreign independent branches. So foreign independent branches is a topic in the financial reporting paper according to the CASNEP syllabus. So what about these foreign independent subsidiaries? Not subsidiaries, but branches. So for the foreign independent subsidiaries, the one I'm trying to talk about, that one is for the advanced financial reporting. But under financial reporting, section 3, I'm going to talk about the foreign independent branches. So remember that in our previous video, I introduced about the branches. So I talked about what is a branch, types of branches, where I said that there is independent branches and the dependent branches, where we did some questions. So we did a question of a local independent branch. Then now, for this video, I'm going to do a question for the foreign independent branches. So if you want to understand about the introduction part of this branch and some of the theory, you can go through the previous videos. There's another video which covers that. So, but now for this one, it's going to cover exclusively the foreign independent branches. So when we talk about foreign independent branches, we always say that before preparing the combined financial statements, before the head office preparing the combined financial statements, the head office itself must translate the operations of the foreign branch to the reporting currency of the head office. So remember that if the branch is in another country, let's say, for example, the head office is in Nairobi, then the branch is in the United States of America. So obviously, the head office, before it prepares the relevant books, it must translate the operations of the branch, which is in another country, like now the one I've said in the United States. So that's what I'm saying. Before preparing the combined financial statement, the head office must translate the operations of the foreign branch to the reporting currency of the head office. So we have two methods which are supposed to be used in the translation. So according to International Accounting Standards 21, we have a first method which is called a presentation currency method. Then we have the functional currency method. So when we talk about presentation currency method, this one is suitable for translating operations of autonomous in nature. So when I say autonomous, I mean independent. Then functional currency method is suitable for translating non-autonomous entities, non-autonomous. So non-autonomous is the dependent entities. And then you remember that the way I've explained foreign independent branches, I've said that these are independent branches. So which means that between the two methods, obviously the method which would be applicable is the presentation currency method, because we have said that the presentation currency method is the one which translates operations of autonomous in nature. So that you need to know various items which you know, not even you need to know, of the income statement. So you know some items of the income statement, and you know some of the items in the statement of financial position. So the income statement items are incomes and expenses. So using now this presentation currency method, how will you translate incomes and expenses? You are supposed to use average rate. Then assets and liabilities, you are supposed to use the closing rate. And the closing rate is the rate which was prevailing, the rate which will be prevailing as at the time, as at the date, when the statement of financial position is to be prepared. Then we have the capital and reserves. So remember that I'm talking about presentation currency method, of which I have said using the presentation currency method, incomes and expenses are translated using the average rate. capital and reserves are translated using the closing rate. Then we might have things like depreciation. So now depreciation, remember that it's a non-current asset, a tangible one, which is depreciated. So the relevant rate which you used to translate that asset which has been depreciated is the same rate you use to translate that depreciation. So I mean that for depreciation, use the rate which was used to translate the respective asset. Then for the current accounts, you use the actual. Then remittance, you use the actual. Already I've explained what is a crossing rate. Then there's something here I never mentioned concerning capital and reserves. So if you are translating the capital and reserves, things like the equity components, you use the historical rate. And the historical rate is the rate which was prevailing as at the date when the branch was, that is when the foreign branch was acquired. So as at the date when the foreign branch was acquired. So remember that I'm trying to explain these rates is closing and historical because you will not be told in your question that this is closing and this is historical rate, but the examiner will give you certain dates. So you need to identify those dates. Was this a date as at the date when the branch was acquired so that you know that is historical? Is this a date when the statement of financial position are to be prepared? You know that is closing. And already you have known this closing rate is used to translate assets and liabilities. Then the historical rate is used to translate capital and reserves. Besides average rate, which is used to translate incomes and expenses and other items. So for you to understand this topic of foreign independent branches, we are going to tackle a question of May 2012, question 5. It was a copy-paste question in the current sitting, not the current, but it was, I think, 2019 there. So I will check later and display we go through. But for now, let us do that question of May 2012. May 2012, question 5. So this question 5, I will be doing the question which requires computational because A was theory. So B was the one now which was foreign independent branches. So they say that Erigon Remittent, a manufacturing concern, exports some of the product through an overseas branch whose currency is the Miri. The reporting currency of Erigon is the Kenyan shillings. The overseas branch carries out the final assembly for the product before the goods are sold to the customers. The trial balance of the head office and the overseas branch as at 31st March 2012 was as follows. So that is provided. So that is the trial balance. So don't have to read the items of trial balance. Additional information, you are told administration expenses for the head office and the overseas branch include depreciation charge of 10% per annum on cost for machinery. On 28 March 2012, the branch remittent for the Million Miri, which was received by the head office on 2nd April 2012 and realized 4.9 Kenyan shillings. So what you need to understand here is that before even I continue with the additional information, Erigon was a manufacturing concern, yes, of which some of the products, it exports some of the products through an overseas branch, whose currency is Miri. The reporting currency is Kenyan shillings. So the reporting currency is that of the, where the head office is. So the head office is based in Kenya because I can see the reporting currency of Erigon was Kenyan shillings. So the reporting currency, so the currency of the parent is the reporting currency. So which means that the overseas branch's currency is Mili. So we need to translate the operations of that overseas branch, which is Miri, before doing anything. So that is why they are saying down here additional information number 2. On 28 March 2012, the branch remitted. So the branch remitted a 40 million milli, which was received by the head office on 2nd April. And remember that our financial year, even you can see the required down there, you are required to prepare your books as of 31st March 2012. Or you can see at the trial balance, you are told that these operations of the trial balance is as of 31st March 2012, which means that our financial year ends as of 31st March 2012. So that this additional information number 2, there was some money which was sent by the branch, which was being remitted by the branch to the head office, which was on 2nd April, which is within the year, within the financial year. It was sent on 28 March, which was within the financial year, on 28 March. Remember that one is before the financial year ends, which is 31st March. That is the time when they send the amount of 40 million milli. But it was received now on 2nd April. Remember, the 2nd April is after the financial year has ended, 2 days after, to be more specific, because now our financial year was ending 31st March. So which means that by the end of this year, this amount of 40 million milli was on transit. So that is a cash in transit. It has not been received by the end of the year, but it was received some 2 days after the financial year. So that it was cash in transit. A provision of Kenyan shilling 750 million, not million, but thousand, Kenyan shilling 750,000 for unrealized profit on branch inventory is to be made. So some questions you would have to compute this, but for this question, the examiner was a bit fair. He said that there was provisions for the unrealized profit, which has already been made for any branch inventory. And you know that when we talk about unrealized profit, on this scenario, they check on the branch inventory, because now this branch inventory was from the head office. So remember that, for example, the head office sold goods to the branch, but by the end of the year, the branch has not resold the goods it received from the head office. Remember that the head office had sold the goods to the branch at a profit. So if the branch has not resold the goods it received from the head office at a profit, some of the goods were remaining. Out of the goods which are remaining, there is unrealized profit. So on that unrealized profit on the branch inventory, that is why they made a provision. They made a provision. So the amount to cater for the unrealized profit, so that is a provision. Number 4, during the month of February 2012, a branch customer in error paid the head office for the goods supplied by the overseas branch. So instead of he could have paid the branch, that customer in error paid the head office for the goods supplied by the overseas branch. The amount due was 800,000 milli, which the head office, that is what they mean, which realized 90. Remember that it's the customer, the branch customer who paid the head office instead of paying the branch. So when when this customer paid the head office, this head office realized 90,000 out of the amount of 800,000 milli. So which means that they have already converted, and they have said that it was the 800 milli was equivalent to 90,000 Kenyan shillings. So the amount was correctly accounted by the head office, which is fine, but no entries has been made in the branch books to reflect the transaction, which means that we have to do the necessary, that is to make the relevant adjustment. Then the prevailing rates of exchange was as follows. So you are given dates, as I said. That is why when we started the question, when we started the topic, I started by talking about those rates, of which I said in order to know that this is a closing rate, you must know that a closing rate is as at the date when the statement of financial position is to be prepared. Then for the historical, I said, is the date when the branch is acquired. For the average, you will be given direct. Then for the others, again, it's just direct. For this concern, you need to know how to determine closing rate and the historical rate. But for the others, it's an easy job. So you are required to do the branch translated trial balance, head office, and branch income statement. in columnar format for the year ended 31st March 2012. So combine the Adobe's and the branch statement of financial position as of 31st March 2012. So we can go direct to the computation. So we start with we translate now the trial balance. So as you translate, remember that we have to make again various adjustments which were never made. So we have here the branch. So these are about the branch translated trial balance. So we have the branch translated trial balance. So for the branch translated trial balance, remember that we will be translating the overseas branch, which is currency is milli. But I said before we even translate, we have to adjust that trial balance. So I will have an adjusted trial balance. Adjusted trial balance. So remember, adjusted trial balance, I will have my debit and I will have my credit here. So I will mention there about the rate to be used to translate. Then now after that we could have translated. So translated now trial balance. So I will write in short, translated trial balance, TB, trial balance. So TB stands for trial balance. So debit and credit. So we have to start with the items which are given. So the first item which was given in that overseas branch so which I need to display it so that you know what I'm doing. So this is the relevant trial balance to translate. So, but now here we will be translating the overseas branch. So this is the relevant branch I will be translating. So the items of this overseas branch. So of which we need to start here. So we have account receivable. You can see the account receivable is 90. Then account payable is 3,900. So we will be translating these operations. So I will be translating these operations as I make adjustments. So this is what I will be translating as I make relevant adjustments, which were never made. So that is according to additional information. So right now the account receivable, I have to make an adjustment because there was a certain amount which was being paid to the head office by a branch customer. So note 4. So there was this amount which was paid in error. So the head office had already recorded that, but the branch had not made any entries. So remember that a customer is a debtor. A customer is a debtor. So we need to subtract that amount because the head office has received that amount. So we need to reduce our account receivable. So I will take the 90. So the account receivable, but remember here now, I will not take the 90, but the 800,000, which was in milli, because that was the amount in the foreign currency. It's only that out of that amount, the head office had realized 90,000. So here, so for the figure of the account receivable, is 90, which is fine, the one given there. Then we have to subtract the 800. We have to subtract this 800. So the amount due was 800,000, which realized the 90. So I have to minus the 800. I have to subtract 800 here. If I use my calc, 90,000 minus 800, that is 89,200. Then now we have to translate that. So, and you need to know that the account receivable, this is an asset. And we said asset, we use the closing rate. Asset, we use the closing rate. And you know that the closing rate is the rate when the statement of financial position is prepared. And our statements are prepared as at 31st March 2012. So as at 31st March 2012, the rate which was there is 8 milli to 1 Kenyan shilling. 8 milli to 1 Kenyan shilling. So that is 8. So which means that when you will be doing this, obviously you will divide. Obviously you will divide. Because you have been told 8 milli to 1 Kenyan shilling. And we need to convert 89,200 milli. So these are about you divide. So you need to determine that, you need to test. So when I will be translating the operations from milli to Kenyan shillings, I will be dividing. So that is what I will be doing. So already we have identified the closing rate. So if I use my calc, I'm getting here 11,150. 11,150. Then the second thing I have to translate is the accounts payable. The accounts payable. So the accounts payable again, on this question, it's all about a given. So you go to the trial balance. So it was account receivable strong accounts payable. So the 3,900 on the credit side, 3,900. 3,900. So 3,900. So again, this is all about a liability. And I said assets and liabilities, we use the closing rate. So which is again 8. So if I use my calculator, I'm getting 487.5. 487.5. Then after that, we move to free or the building. So these items I will be picking direct from the trial balance. So I think you have now seen on how we are doing these things. So this one is given 157,500. 157,500. We translate. So assets and liabilities, the closing rate. So this is what I picked. So assets and liabilities, the closing rate. But on this one, they were very specific. They said on purchase of building and machinery, they gave us a rate of 9 milli to 1 Kenyan shilling. So which means that if they could have not provided this rate, I could have used the closing, because we know assets and liabilities, we use the closing rate. But since they were very specific, on purchase of building and machinery, we use 9. So they were very specific on that. So if they could have not been specific, we use the closing. So which means that it was 907. Sorry for that. So I need to check again. So if I check on my original past paper, there was a mistake which was done when they were typing this paper. It's on that rate, but that others are okay. So you can see here. So anyway, this might not be clear, but using this original past paper, so I need to correct a certain mistake from this. Remember, this is a book I'm using. So the average rate is supposed to be So this average rate is supposed to be, so according to the past paper, the original past paper, the average rate is the one which is supposed to be 9. And the on purchase of building and machinery, so on purchase of building and machinery is the one which is supposed to be at 7. So I think if you could be having your past paper, you would see that. If you have the original past paper from CASNEP, you would be able to realize that. So we continue. So that it was a mistake on typing on this. This is a book. So this other paper I'm using is the original paper, the original past paper. So that is fine. So we continue. So I was talking about on purchase of building and machinery. So which means that we use 7. So which I said, if they could have not been specific, we could have used the closing rate. But now if they are more specific, they have said we use 7 according to the correction I've made. So that is 7 on purchase of building and machinery. So if they were not specific, we use which rate? Closing, and our closing was 8. So we continue. So if I use my calculator on that side, I'm getting 22,500. So the next thing I will do is all about revenue. So revenue was given for the branch. For the revenue which is given there is all about, so the revenue is, you can see the revenue here is 1080, this one. So it's 1 million. So this one was 1,080,000. So that is 1080. So, and revenue is an item of an income statement. So which we said for the income statement items, like incomes and expenses, even revenue, we use the average rate. And the examiner provided with the average rate. So the average rate, which means that here would be as given down there, 9. So the average rate for the year is now 9. The average rate is 9. So if I divide, I'm getting 120,000. That is 120,000. Then the next thing we talk about another item which is given. Remember that we are translating the operations of the foreign branch. We have Adobe's current account. So remember that I said the Adobe's current account and the branch current account. These are the two current accounts which are prepared. So the Adobe's current account is prepared by the branch, and the branch current account is maintained by the Adobe's. And these are the accounts which assist the Adobe's to practice the oversight role. Remember that it has to oversee what is going on in the branch, of which the branch has to report to the Adobe's. Even if the branch is independent, remember that by the end of the period, it has to translate, it has to transfer, not to translate, it has to transfer its profit. So you can see we are doing the branch translated trial balance, of which I've said already, the branch maintains Adobe's current account. So the Adobe's current account was Adobe's current account, which again we need to adjust with that profit which was paid in error, because this is just a main account. So Adobe's current account was 1.26. So 1.26. So what I will subtract there is that note 5. That amount which was paid by the customer in error to the Adobe's. of which the Adobe had made the relevant adjustments, but the branch had not made any adjustments. Remember the first area where we subtracted is under debtors. We reduced our debtors because the amount has already been paid. And another account, which I've said is the merge account, is the Adobe's current account, which is maintained by the branch. Then the Adobe's would maintain the branch current account. So in order now for them to communicate all about the Adobe's to oversee those transactions of the branch. So what I will do, I have to take 1260. So it was 1260 according to my past paper here, the original one, 1260, 650. Then I have to subtract the 800, which was in error, which had already not been adjusted. So that one is on the credit side. I will put it under the credit side after subtracting. So that is 1259, 850. So the 1259, 850. But now, remember that this one, I said use the actual. And I want to now you understand what is the actual. You have to understand what's the actual. So when I talk about the actual, I mean now the actual figure in the Adobe's current account. So remember that here they have given us, they have provided us with the Adobe's and the branch current account. So of which I have taken this. This is under the branch, under the column of the branch. We have made the relevant adjustments. But now the actual figure in the Adobe's is, that is what I mean. The actual figure now in the Adobe's is 150,000. So that is now what you are supposed to record. The actual figure now in the Adobe's 150,000. So it is 150 to 50. So 150, 250, 150, 250, 150, 250. So whenever there is an error, I will be making adjustments because I've realized them, but this book was having some errors concerning the typing. So that is 150, 250, 150, 250. That is fine. So that is the actual now, 150, 250. Then after that, we have now to move to the next thing. As given in the branch, so we have the branch cost of sales. So the branch cost of sales, this one is 868,500. So let's check if that one is fine. 868,500. So that is fine. So 868,500. So remember that the cost of sales item, that is an income statement item. So which means that I use the average. And you know that the average rate is 9. This average rate is 9. The average rate is 9. So if I take my calculator, I'm getting 96,500. 96,500. I'm getting the 96,500. Another thing we have to move to is all about provision for depreciation, which is also given. So the provision for depreciation was, according to my paper here, is all about 141,750. So 141,750. So provision for depreciation. And remember, this one is concerning machinery. Provision for depreciation of machinery. So provision for depreciation of machinery. So that is the case. So we translate. So which means that which rate am I going to use? So the rate which was used to translate the respective machinery. Because I said depreciation, use the respective rate used to translate the respective asset. Of which they said on purchase or building and machinery, use 7. On purchase or building and machinery, use 7. So which means that if we divide the two, I get 20 to 50. So the 20, 250. Then after that, we talk of inventory. So inventory as given, I can see here is all about 28,800. I will also display for you to see what I'm doing. So this is the case, 28,800. So remember the inventory is an asset. We use the closing rate, and the closing rate is 8. The closing rate is 8. So if I use my calculator, I'm getting 3,600. Now after inventory, we take another thing there, admin expenses, administrative expense. So I will say admin expense. So this one, we have to make an adjustment. Because now additional information number 1, they had said that admin expenses include some of the admin expenses for head office and overseas branch include depreciation charge of 10% per annum on cost of machinery. And we know that depreciation charge on 10% of the cost of machinery. So the cost of machinery is for the branch is this, 315. So 10% of that is 31,500. And you know that machinery is translated using which rate? So depreciation of machinery, and they gave us on the rate of machinery, on purchase of building and machinery 7. So which means that when we get the 10%, this one will be translated using 7. So the 10% of 315, you get the depreciation of machinery, of which to translate the depreciation of machinery, we use the respective rate, which was used to translate the machinery, which is 7. Then admin itself. So administrative expenses, you can't use the 7, but administrative expenses is an expense, which is an income statement item. So since it's an income statement item, you use the average. And you know that the average is 9, as given down there in note 5. The average is 9. So the average 9. So which means that first, before translating this admin expense, I have to subtract the depreciation which was inside here, which they said in note 1. So which means that I will be dealing with the admin expenses and the depreciation separately. But remember, this depreciation is that of machinery, and it's on 10%, which we have already computed. We said it was 315,000 times 10%. You get at 1,500. The admin expense will be, you have to take the 76,500, you minus this. So you have to minus the 31,500. So if I take the 2 and I subtract, I'm getting 45,000. because this one was inside this 76,500. So that the rate to use for the admin is average, which is 9. Then for the machinery, we said on purchase of building and machinery, they provided us a relevant rate because we said for depreciation, use the respective rate, which was used to translate the respective asset. So when they were translating machinery, they used the 7. So we have to use 7. So that is fine. So I'm getting 5,000. And I'm getting 4,500. Then after this, we have to move to the next thing as provided in the question. So another item which was given in this question is concerning profit and loss account. That one was not there under the branch. But for the machinery, it was there, 315,000. So the next item, so another item I need to translate, which is given under the overseas branch, is the machinery itself. So the machinery. And the machinery is all about 315,000. So the machinery used the relevant rate on purchase of building and machinery. So on purchase of building and machinery, we were given 7. So this one will be direct because this is 45,000. Then another thing is all about remittance. So the remittance, which is under the so machinery we use that is a 315, which we have translated with the rate of 7 because that one is provided. Then remittance, which was given here, was all about 680,000. So this one again used the actual. So remember this amount which was remitted, which was sent by the branch to the head office. The branch sent 680, but the head office received what? So this is what was sent. This is what was sent by the branch. But now the head office received what? The actual amount now. The actual is the one which the head office received. So 70,000 plus there was an amount which was on transit according to note 2. The amount which was on transit, the 40 million of which the head office received 4.9. So we have to add here to 70,000. So the total amount would be 74.95. So I have to take 70,000 plus this one. That is the actual amount. The remitted was 680, but now the actual amount which was received by the head office was 70,000 plus the one which was in transit, even if it was received some 2 days after the financial year has ended. So that is 74. That is, I will record 74,975, the total. So it will be 74,975. So the 74,975. So after that, we talk about another thing, which is bank balance. So the bank balance for the branch, we are told is 198,000. That is according to the trial balance. So, and remember, this is an asset. So an asset, we use the closing rate, and our closing rate, we know that it's 8. So if I translate that one using my calculator, I'm getting 24,750. Then after that, we move to the last item, selling and distribution costs. So the selling and distribution, that is 72,000. So the 72,000 so that we translate using the average. You know that the average rate is 9. Because selling and distribution is an expense. So use the average rate. So that is an income statement item. So if I translate that one, I'm getting 8,000. 8,000. So that is fine. So now we can check if our trial balance is balancing. So if I start with the adjusted one, if I take 89,200 plus 157,500 plus 868,500 plus 28,800 plus 45,000 plus 31,500, 315,000. We have 680,000, 198,000, 72,000. So if I add my debit side column, I think I confirm it's fine. So I'm getting 24,85,500. So that is 24,85,500. 24,85,500. Then for the credit side, again, I take 3,900 plus 1,080,000, 1.259,850, then 141,750. I'm getting the same, 24,85,500. So that is fine. That is it has balanced the debit and the credit after adjusting. Then for the translated trial balance, for the debit side, I'm getting so if I take 11, 150, 22,500, 150, 250. So this one was supposed to be on credit because this one was on credit. So here we made a mistake. So this is 150, 250. So because you can see this one was on credit, so this one is supposed to be on credit side, which is fine. So I confirm again, 11, 150, 22,500, 96,500, 3,600, 5,000, 4,500, 45,000, 74, 24, 8,000. I'm getting 295, 975. So it's supposed to be 295, 975. But now this side was this side I can see if I use the calculator. So 487.5, 120,000, 150 to 50, 20 to 50. So this amount on the credit is lesser than the debit side. So which means that we have a balancing figure of 49,87.5. So which means that this one, so if the debit side, when you translate, remember that when you are doing translation, remember that we are translating the operations of a foreign branch. So when translating the operations of a foreign branch, in some cases, they might arise a foreign exchange difference, of which it might be a foreign exchange gain or a foreign exchange loss. And this is due to the inflation rates. So due to this foreign exchange gain or loss, so in order to know that it's when you translate, you have got a gain or a loss. Like now, if I was translating a dollar, like now today, it might be at 100. Then tomorrow you might find that it has increased to even 105. So due to that inflation rate differences, like now on this scenario, we have seen that there's a difference of 887.5. So which we say that if the debit side is greater than the credit side, that one is a foreign exchange gain. So which means that this is a foreign exchange gain. So when they were translating, they gained. When they were making translations of the foreign branch, they gained. So if the credit side was higher than the debit, that is a foreign exchange loss. So after we are done with the first term, which was a bit time consuming, the other work would be easier for you guys. The other work would be just an easy work. So the next requirement, which was we were supposed to do, is all about head office and the branch income statement. Then we finish with the statement of financial position. So now we talk about the preparation now of the statement of the comprehensive income. So that is the income statement. So we say Ergon, so it was Ergon remitted. So it was Ergon remitted. So that is an income statement. So income statement for the year. So it was here ended 31st March 2012. So remember that we talk about the head office. We talk about the branch. And we talk about the combined. So for the case of head office, branch, and combined, this is very easy because now this one would be very easy. Already they have just made enough tricks under the translated trial balance. So income statement is easy. So we start from sales or revenue. So here we were given to 60,000. Then now for the branch, remember that you would be picking. So you are supposed to pick the one which you have translated, of which the revenue was 120. So the 120,000. So this one. So for the 260 is direct from the question, because that one is for the head office. So on the side of the head office, our revenue is 260. This is for the head office. So the 260. Then the one which you translated for the branch, 120,000. So if I add the two, I'm getting 380,000. Then after that, we talk about goods sent to branch. Goods sent to branch. So goods sent to branch was 87,500, of which you know that this one is only recorded under the head office. So we have a net sales. So the net sales is 300. So if you add the two, I'm getting 347,500. This one is 120,000. Then the last one is 380,000. Then less cost of sales. So the cost of sales is 146,000. The 96,500. So the 146 is direct from there. Trial balance. And this one is from here. The one we translated, the 96. So in short, I will be picking. So once you pick the head office, then you pick from the one which you translated now to Kenyan shillings. Because now this is the one which was in milli. Then once I translated, I got Kenyan shillings. That is the transactions of that is the currency of the head office. So when I would be picking the head office, then I pick from, for the branch, I would be picking from my translated trial balance. So if I add the two, but now remember this one cannot be added that direct because there was, remember to get cost of sales, for the combined cost of sales, I need to do a working. So for the combined cost of sales, and you know that cost of sales is equals to opening stock plus purchases minus closing stock. But now we don't have to use this formula. So what I'm trying to express here is that it includes stocks. So which means that my cost of sales for the head office cost of sales. So let me write head office cost of sales. So the head office cost of sales is 146,000. Then remember that they said somewhere in that question of yours, under the branch cost of sales, they say that it includes goods sent to the branch. It includes goods sent to branch. This is what they said here. Under the head office, to be specific, they said under the head office, including goods sent to branch. Including goods sent to branch. So which means that goods sent to branch I have to subtract. Goods sent to branch. Goods sent to branch. So goods sent to branch, which were included under the head office cost of sales, I have to subtract here. And the goods sent to the branch, you can see it was 87,500. But these goods sent to the branch, they never said if they were resold. And we know that if they are not resold, and the head office had sent the goods to the branch at a profit, so the branch has not realized the profit which the head office realized. That is why they made a provision. So I have to reduce the provision of 750. So if the goods have not been resold, of which they never mentioned, but they gave us a provision. So the provision will cater for that and realize the profit, which the branch will never realize due to the goods he received from the head office, which were never resold. So there's this provision under note 3. So we need to reduce that. So if I reduce that one, I'm getting 86,750. So if I subtract, as I have said earlier enough, I'm getting 59,250. So that now I can add the branch cost of sales. So the branch cost of sales is 96,500. This one. So if I add the two, I'm getting 155,750. So this is 155,750. So the gross profit will be so the first one is 201,500. The next one is 23,500. Then the last one is 22,42,50. Then I will add an income, of which an income we made is the foreign exchange gain when they were translating the operations of the foreign branch, foreign exchange gain. So they made a gain of So from our first working, so we got a gain of 8, that is a 487.5, this one, 487.5. So that is under the branch. It was 4987.5, so that is a mistake I made. So this one, if you compute anyway, this one is 4987.5, 4987.5. So now according to my calculator, I'm seeing that. So 4987.5, 4987.5. So this is 4987.5. So remember that it was under the branch. So then we raise expenses. So the expenses, we have some which are direct from the trial balance, like now admin expense. So for the head office, it was 39,500. But now for the branch, remember the admin, they said that for the branch and both the head office, it was including depreciation. That is according to note 1, depreciation of machinery. So when I was translating, I separated the two, these two. Not these two, but this one. So these two. So the admin and the depreciation of machinery. So that I mean that now to record here, I will record a total of 9,500 because they were together. It's only that when I was translating, we were supposed to use different rates. That is why I separated them according to note 1, the way they say it. So I separated them. Then I got for the admin is 5,000. For depreciation of machinery is 4,500. So the total is 95. So for now, I will record the total of 95. Because they were supposed to be recorded together. But for translation, they were using different rates. That is why when I was translating, I did them separately. I did them separate. So that if you add here, you are getting 49,000. Then another expense, which is direct, is selling and distribution. So 58 to 50, that is according to the head office. Then for the one I translated, the last item, 8,000. That is 8,000, 8K. So then the total of the two is 66, 250, 66, 250. So that unrealized profit, we have to subtract unrealized profit. Because I said, if the stock of the branch has not been resold entirely, and this stock was from the head office, remember that the head office realized the profit, but the branch had not realized the entire profit because it never resold this stock it received from the head office. So which means that the head office profit is overstated by what the branch never realized on the goods it received from that head office and which were never resold entirely by the end of the year. So you have to look for the unrealized profits so that you minus from the profit of the head office so that you avoid overstatement. But already they have made a provision which we have to subtract on the unrealized profit of 750,000. So there's nothing to compute. You just take the one which is given, subtract under the profit of the head office. So that here, I'm getting a profit of, so here we have a net profit. So the first one is 103. The second one is 1097, 1098.7.5. Then this one is 113,987.5. Then we have transfer branch profit. Because now once we have done the net profit, this branch profit must be transferred to the head office. So which means that I will subtract this 1098, so 10,987.5, then I will add it under the head office. So this branch profit must be translated to the head office. You have to translate that to the head office. So this one I'm getting 113. So the 113,987.5, which is the same as for the combined. So this net profit after now the transfer. So net profit after that transfer. Then now we need to add the profit for the retained profit. So the retained profit brought down. That one was given in the question and it was under the head office. They gave us some profit and loss account, which contains a profit which had been retained from the previous year by the head office. So which we need to add it to the profit of this year so that we get the profit by the end of the year. So there was this 5,000 profit and loss account, 5,000. So that one was maybe a profit which was retained from the previous year. So we add it to the profit of this year so that we get a retained profit by the end of the year. So what I'm getting here is a retained earnings. Retained earnings balance carried down, or retained profit balance carried down, which would be 118,987.5. That is 118,987.5. 987.5. So we are done with the income statement. And now let us finalize with the statement of financial position. So now we talk about now the statement of financial position. That is Edwin Limited. So we talk about the statement of financial position. So the statement of financial position. So that is fine. So as at, so our financial year was ending on 31st March 2012. So we talk about head office. We talk about the branch. And we talk about the combined. So when we talk about this one, we obviously start from non-current assets. So the non-current I have is freehold building. So freehold building, this one is just something which is given in your question direct. For the head office was, so the amount there is what? The head office. So this 35,000. 35,000. Then for the branch, you have to pick the one which you translated. So the one you translated is 22,500, this one. So the 22,500. The 22,500. So if I add the two, I'm getting that is 57,500. Remember, I'm adding this and this. Then another asset is machinery. But remember, machinery was having a depreciation. So the machinery under the Adobe is 15,000. And under the branch is 45,000. Because for the Adobe's, I have just picked the one you have in your equation, the 15,000. Then for the branch is the one which is we translated. Then we have to minus the provision for depreciation, this one. Provision for depreciation. For the Adobe's, I can see 3750. That is provision for depreciation, so that we get the net book value. So that is 750. Then we have provision for depreciation of the branch, which we did what? Which we translated. So provision for depreciation, 20 to 50. So I'm talking about this. So the far end there, 20 to 50. So we subtract. So the first one, I'm getting 11 to 50. Then the second one is 24, 750. So the total, if I use the calculator, if I add the two, this one is 36,000. Then we said we have two current accounts. That is Adobe will maintain branch current accounts. And that one is recorded as a non-current asset because it's all about, it shows the investments. So it's treated as an investment. So we talk about the branch current account. I think I explained this from our local independent, why I'm recording this here. This one is seen as an investment. So which is maintained by the Adobe. So I will come later to determine that, and that one is maintained only under the Adobe's, the branch current account. Then we move to the current assets. So the current assets, we talk about inventory, the closing one. So for the closing inventory, we have 72 to 50. That is for the Adobe's. That one is from the trial balance. Check on your trial balance. Then for the branch, we got the inventory of 3,600. So that under combined, in order to get the combined, I have to take 72 to 50 plus 36. But now under 36, I have to minus 750. Under this, you have to minus the 750. So why am I subtracting the 750 from here? So remember that by the end of the year, this stock was remaining. It has not been resold. And this one was from the Adobe's. So which means that there is unrealized profit inside this 3,600. But there was a provision which has already been made. So the 750. So that is why I'm subtracting when recording the combined. So I'm getting the total of 75,100. Then for the receivable, so for the Adobe's is direct from the balance. Then from the translated we have the receivable was so the account receivable, the first one here, 11,150. So I'm getting 33,400. So after the receivable, we have bank balance. This one is direct. No adjustments other than the one we translated. 11,500. Then the one we translated, we got 24,750. 24,750. So if we add the two, I'm getting 36,250. Then finally, there was something called cash in transit. Additional information number 2. It was an amount remitted by the branch to the Adobe. So you record where it was heading, even if it was received on a later date. So it was supposed to be received by the Adobe's. So the 49.75. So that one would be recorded under the Adobe's. It was a cash in transit. It was heading to the Adobe's with the Adobe's received 49.75. And we have to record under the total. Because no adjustment had been made on that. So which means that I'm done with the assets. So the next thing we have to talk about is equity and liabilities. So for the equity and liabilities, I will just use abbreviation ordinary share capital. So the ordinary share capital is given under the Adobe's 100,000. Then this one is 100,000. They're combined. Then we have to take the retained earnings or retained profit. Remember, this one is from the end of the year, which is from the income statement. So we need to. So the one we got down here. After getting the profit for the year, we added the retained profit. That is profit. That is profit and loss account. We got 118,987.5. 118,987. So 118,987.5. $118,987.5. Then we said that the Adobe's current account is maintained by the branch, and it will be recorded under equity. Adobe's current account. So these are about Adobe's current account. So this one will be recorded as an equity item under the branch, because the branch is the one which maintains Adobe's current account. Then the Adobe's maintain the branch. So the two accounts, the two are supposed to be the same and opposite to each other. So if they are not the same, there's maybe cash in transit, goods in transit, errors which were made maybe. Then the last thing, there was no non-current. So we talk about current liabilities. And we have only one current liability. So the payables, the trade payables, which is direct, 23,750. And the one which is translated is payables. That is the second one. So it was 9. That is it was 487.5. 487.5. the one which is translated. I think you have seen that. So if I add the two, I'm getting 24 to 37.5. 24 to 37.5. So this is fine. So we can now do the balancing. So of which we can start from the combined. So for the combined, there's nothing which is missing. So I will take my 37,500, this one. Remember this one was our working. So this one, and this one, I add. So 57,500 plus 36,000. So I'm getting here, I'm getting 93,500. So sorry for the technical error which happened for 1 second. So let us do the balancing. So I was saying that now we can be able to add the combined. So the 57,500, 36,000, I'm getting 93. That one I was getting 93,500. Then after that, we have to add 75,100 because I said this was just a working we did here. Plus 33,400 plus 36,250 plus 49,75. So I'm getting 243, 225. That is the case. Then if I add 100,000 plus 118, 987.5 plus 24, 237.5, I'm getting the same. So we have balanced the combined. So because you can see the assets and equity and liabilities are equal. Then for the column of the branch, I can see we can add the assets because there's nothing which is missing under assets. So 22,500 plus 24,750, that is 47,250. So if I continue adding 3,600, 11,250, 11,150, 24,750, I'm getting 86,750, which means that down here is supposed to be again 86,750. So this implies that I can get this head office current account because just I will take 86,750 minus 487.5. So if I do that, I'm getting 86,262.5. So this one. So I've taken the total 86,750 because now assets and liabilities are supposed to be equal. So in order to get this, I've taken 86,750 minus 8, that is 487.5 minus 487.5. So I'm getting this. So, and we said that the branch current account and the head office current account are supposed to be equal. So which means that 86,262.5 is supposed to be here, but the only thing I have to subtract is to subtract the net profit. So net, the unrealized profit, not the net profit. So I would say 86,262.5. So the only thing you subtract there is the unrealized profit of 750. Because the profit of the head office was overstated by 750 due to the stock of the branch which was never unsold. And this stock was from the head office, but they had already made a provision. So we have to reduce the profit of the head office by the provision in order to avoid overstatements of the profit. So if I do that, so I've said the two accounts, this and this. So head office and current account are supposed to be the same. So once you get this, you would be able to get this. So the only thing you subtract from that amount is the unrealized profit. So I'm getting 85,512.5. So now I can add and check if it's balancing. If I take 35,000 plus 11,250 plus my answer, which is 85,512.5, I'm getting 131,762.5. Then I continue with 72,250 plus 22,250, 11,500, 49,75. So this one is 24, 27,37.5. Then the other one, equity and liabilities, or 100,000. Then we have 11,8987.5 plus 23,750. This is fine, it's balancing. So 24, 27, 37.5. So there's no happy moment like this when an accountant, you do your books and they balance automatically. So that is fine. So that is how you are supposed to do anyway this question of foreign independent branches. Foreign independent branches. So this question, the only the examiner did is just he took this question for 2012 and tested it on 2019 May. So let's display that question so that you can see it's the same. So I will be displaying the question so that we check what the examiner did in that sitting. So that is the question. So you can see it's a past paper for cast name. So this cast name examination, May 2019, and the other day, May 2019. So let us go to question 5. So this is question 5. I will be talking about B. So they say that Baraka is a manufacturing firm with a head office in Kisumu, Kenya, and a branch in Entebbe, Uganda. So the branch carries out final assembly of the products before selling them. So the currency is Kenya. In Kenya, that is the Kenya shillings, while the currency in Uganda is Ugandan shillings. So you know that the branch is in Uganda, then the head office is in Kenya. So it means that you will be translating the operations of Uganda, which is an overseas branch, where it's based, so to Kenyan shillings. So the trial balance for both head office and the branch in their respective currencies as at 31st March 2019 was follows. So you can see that these just the same question. Sales was there, freehold, trade receivable, share capital, goods sent to branch, head office, cost of sales, provision for depreciation, head office, cost of sales, including goods sent to branch. There is no change. It's only the changed figures. Admin cost, inventory, branch, and then profit and loss account, machinery, remittance, bank balance, selling and distribution. There's nothing they changed there. In these items, it's only these figures they changed. There is no concept they changed. If you can see even additional information, there is no concept that they changed. The branch remitted Ugandan shilling 64 million on 30th March 2019, which was not received by the head office until 3rd April. So this is again cash in transit. It was our additional information number 2 in the previous question. The amount realized was 79.60. The other one was, I think it was 49 something. So they changed that figure. So same thing. Number 2, in the month of February, a custom of the head office, this was working number 4, additional information number 4. In the month of February 2019, a custom of the branch paid the head office for goods supplied by the branch. So the amount due from him was 1 million, that is in terms of Ugandan shillings, which realized this amount. It has not been correctly dealt with by the head office. It has been correctly dealt with by the head office, but not yet entered by the branch. The same concept. Commission, which is payable to the branch manager, is provided at the rate of 5% of the net profit. So this is the only thing they brought in new. So after you get your, you see here, so the only thing you will introduce is that one. So which means that, let's say, for example, you are doing this. After you get this net profit, you pay the bonus, and that's all. That is the only change. So after getting your net profit, consider the bonus. It was a bonus commission, not bonus commission. I'm talking about bonus because most of the question you find that they have talked about bonus, but this is commission payable to branch manager, 5% of the net profit of the branch after charging the such a commission, after charging that commission. So which means that your net profit you will get is at 110. So you will say 10 divided by 110, not 110, but this 5%. Sorry for that. So the net profit you will get after computation right now, here, for example, it was 10,987.5. So I will say this one is 5%. So they're asking about 5%. So the one you get here is 150, 105, not 15. I don't know why I'm just talking about different percentages. It's due to that we have done more questions. So many questions are in my mind. That's why you always find that I moved it to 10%. So anyway, we make corrections. So 105% is equals to 10,987.5. So I'm using an example. So you need to get what is 5%. 5%. So 5% of 105 times the 10,987.5. So that will be the commission, which you subtract. Which you subtract here from the branch profit and under the combined before now making any transfer. Then now the process will continue the same way. The process will continue the same way. The process will continue the same way. So I'm saying it's 105 because they said after, they said 5% of the net profit of the branch after charging such commission. So that it means that the net profit you get is at 105. So you look for 5%. Number 4, cost of sales figure include depreciation, charge of 10% per annum on cost of machinery. So the previous one was admin. So this one they have changed to cost of sales. So it's the same concept. It's only that now you will be separating now the depreciation from the cost of sales when doing your translation. The way we did for the previous one, it was concerning admin, but this one is now it's under the cost of sales. So it's the same concept. That one they have not changed anything. Number 5, a provision of 1.2 for unrealized profit in the branch inventories to be made. There's no change. That one you knew how we dealt with the provision of unrealized profit. So the only thing they introduced here is now the 3, which I've explained how to deal with that. The others were the same. The others were the same. So even the relevant exchange rates, average rate on date of purchase of freehold, building and machinery. So then we have, they ask the same things, branch trial balance, income statement and statement of financial position. So you can see Kasne Rags questions. They always repeat questions. They always repeat questions. Even this one was a repetition. So in this sitting, they repeated 2 questions. Even this one, I can prove to you, it's a repetition. This for Michengo construction, the contract. I think this one was in 20-some, 12. So I have to confirm that immediately before I call it a day, so that I can be able to show you. So I want to display that the question of contract, again, it was a repetition. It was a question of 209. So let's read that question. Even if I will be not tackling it, I will tackle it next time. But let me prove to you that it's a repetition. Most of the questions, so that year they repeated many questions. That is 2019. So you can see this question. This question is for December 2009. So if you have the past papers for long times, like now 205, 207 there. So when you revise these small topics like insurance, banking, farming. So you see insurance, farming, banking, provision of farms, contract, hire purchase, recess. They repeat these questions which were tested some times back. So right now, if I can read this question is for contract. They say Jude contractors carried out work on 4 construction contracts during the financial year 30th September 2009. Details of the contracts are set out below. You have the contract A001, B002, Z003, D004. We have the contract value, cost to date, estimated future cost, payment on account, revenue recognized in the previous period, and cost recognized in the previous period. Additional information. So before additional information, you can see we have dates of commencement here. Then additional information, they say the company does not recognize profit until contract is at least 5% complete. The policy of the company is to calculate the percentage of completion on cost basis. The company prepares separate trading accounts for each contract. The company uses percentage of completion method as per the International Accounting Standards 2. So they need trading accounts for each of the contracts showing clearly the revenue to be recognized, an extract of the income statement, and an extract of the statement of financial position. Let us now look at the question of 2019. This one. Michengo Construction carried out 4 construction contracts during the year. The same thing. Details of contracts are set out below. The same thing. Contract price, cost to date, payment on revenue recognized in previous. So, so you can see if you could have revised well this year, you could have passed with flying colors. Date of commencement, additional information, the same additional information. Company does not recognize until it's 5%, does not recognize profit. Company policies to calculate, the company prepares the same requirements. And this is which year? 20? This is 2019, and that one was 2009. So they know obviously you don't have those past papers, but some of us, we have them. Another one. So those are the 2 questions they repeated. The others were just new questions. Because I can see in this sitting again, they tested, other than contract, they tested partnership. This is all about dissolution. This question 3. These are about partnership, dissolution of a partnership. Then question 2 was consolidation. That one we have done. Even dissolution of a partnership, I have already tackled that. Then group accounting, we have done that. So on our next, on my next video, I will be talking about contracts. That is why I was just trying to display what they did in this year. I will be doing that question, which I have just said. This one, which was a repetition. Then after contract, I have to do professional firms. How you are supposed to prepare the books of accountants, lawyers, and maybe advocates. So guys, you can have a nice time. You can have a nice time. Enjoy the sessions. And if you could like to support this good work, this is my number. So it's both a number which you can be able to call me for any question. It's a number which you can call for any question concerning what I'm doing. That is financial reporting and any area in accounting. And at the same time, it's my M-Pesa number. So you can support, you can do something. So let's meet maybe when I would be doing now another thing for another topic, that is for professional firms and contracts. Have a nice time. And remember to subscribe to the channel and share with your friends to subscribe. Even if they're not doing accounting, let's grow this platform. I have a nice time. We meet next time when I will be doing another work.